Today in this video, I am talking with Yazan Homzi, and we are going to be talking about the market, more specifically, market irrationality, craziness, whatever you want to call it. So let's go ahead and get started. Yazan, thanks for joining me.
Thank you for having me. So, I think first of all, thank you for those two videos that you did over the weekend. Um, you're talking about price of comfort, and it kind of hit a note, and I think a lot of people that watch should watch that video. It's actually gonna resemble some of the things that we're gonna talk about. So, the way that we're gonna divide this is we're going to divide it in two parts. The first part is going to be we're going to talk about non-MCE stocks, and then we're going to talk a bit about Euro stocks. So so let's start off with one example to show the market irrationality. If you can punch in on your ticker or on your screen MSOS. And MSOS, without being able to kind of say a lot because there is a taboo, but let's say that the retail outlets, they represent companies or they invest in companies that have retail outlets that sell their product, these products. These include TrueLeaf, CureLeaf, the bigger names that are out there. A lot of these companies, in fact, the TrueLeafs and the CureLeafs and some of the other names are actually EBITDA positive, they're free cash flow positive, and they have shown growth, consistent growth over the period. What happened is if you go back 5 year to the 5 year chart, you will see that this thing was hit a high of 50 some dollars. And what was the catalyst there? There was massive speculation that went from that 20 to $51 that the Biden administration is gonna allow for legalization. So these companies went on a massive rally. The ETF itself went as high as $52, representing sometimes the underlying companies were trading at 12 to 15 times revenue just because of the speculation. Now, where are they now? These companies have continued to grow their revenue. They have continued to grow their EBITDA. Some have struggled because they had convertibles. And you know what happens when you have debt that converts, you cannot pay it. So, they're struggling, but others have done really well. But now all these are trading at anywhere between 5 to 20 times EBITDA, and there's no there's no rationale to it. So that's kind of the thinking. That's kind of the the irrationality that we were talking about. Now, you did mention another example was let's use a bigger name, XOM, ExxonMobil. And ExxonMobil, needless to say, so ExxonMobil, look at, it's an amazing company. I worked for this company at the first 2 years of my career. And, it is part of Dow. It's very, it's supposed to, they're dividend paying, one of the largest oil and gas players in the world. Now, again, similar to what you mentioned in your video, COVID hit and everyone's like, no, we don't want to own anything that is oil related. We're going to be stuck at our home forever. We're not going to use fossil fuels. and it hits $32. It was at one point trading, I believe, at less than two times at the next year's free cash flow. And now ExxonMobil is at 109. Look at the percentage from that time to what it is today. And this defies the concept that
It's almost 250% from the bottom.
yeah, and it's a mega cap. And everyone is now, they want to own ExxonMobil, despite the fact that for a second you would think oil prices have come off from $130. They're now hovering in the 70s. You would think, the irrationality here is that you'd think that the value of this company should come down, but it didn't, because it's a crowded trade. Now everyone wants to be in ExxonMobil and Chevron, in these companies.
Well, I remember specifically those days, few months ago, like you would go on Twitter, you were a complete moron if you were not in something oil. I mean, like literally, I had to make a video making fun of it because you were a complete idiot if you weren't in oil. Like it's and oil was going to go to $300. That's what I heard. $300.
Absolutely, absolutely. And this is the thing. See, when we all see the same names, the same companies or trends or whatever, all over social media, the reality is the alpha is gone. That upside, to it is predominantly gone. It doesn't mean that ExxonMobil is not a great company. It's a crowded trade. Do you want to enter before the the herd is all over it and CNBC is talking about it and everyone and their mom is invested in it, or do you want to buy it before? And then
But
let's
that goes back to what I was saying in the videos, the price of comfort versus the reward for discomfort, right? Like everybody's
absolutely
comfortable in the energy now, and everybody was not comfortable when oil was negative, right? But that's when you saw ExxonMobil go from $30 almost four times when you had that discomfort.
absolutely. So you're 100% right. And now let's talk about the favorite topic of what will parlay into MCE picks. So growth stocks went from ARC. They went from the darlings, the beloved stocks of the world. I mean, you mentioned Tesla, you mentioned some of these. I'm gonna pick on Shopify. If you can bring that up, that was a complete insanity of a chart. Um, I mean, I like the business. I know a lot of companies and a lot of friends that have a Shopify account and they sell stuff on Shopify. But when this thing went parabolic due to COVID, this thing hit what 100 and because this was split, so I don't know what was the top 150, 100 something around that, right?
170. 170.
100,
So I'm
yeah,
looking at it like during the low of COVID, it was 34. So went from 34 to 170. That's like a almost 400% return.
yeah,
Almost identical to ExxonMobil, but it went down because it went up for the wrong reason.
yeah. And if you go to finviz.com and you will see that at the time Shopify was trading at almost, I forgot, 45 or 50 times revenue. Okay, no earnings. Today at $37, it is still trading at over 100 times forward-looking earnings. So this is kind of what the irrationality that we deal with in every market. It doesn't matter now, before. So when people say Marius is, he keeps blaming the market, or he keeps talking about the irrationality of the market, they're actually wrong, because irrationality has always been with the market. It's always the case. There's always a crowded trade versus a trade that you can seek an alpha in. And that's, I think, where people uh, get confused. So if we now turn the corner and look at MCE stocks, and the two that we both like, or I personally like a lot. So let's start with Voxture. And Voxture, if you can bring up the chart. So here's Voxture. Voxture, they had a trick. The business combination was Jim's business that resulted in the halt. Okay. Prior to that, the company was making less than $25 million. Okay. The transaction with Jim's company, and then Zoom, and then a few other assets that came in, was the speculation part, where it was that, we don't know what it is, but we think it's going to do this and this and that, digitizing the entire kind of mortgage experience, from valuation to appraisal to all the rest, RPTA, the like. And during that time, it takes time for the revenue and for these assets to kind of come together, and to start showing the growth. But no one cared. This thing Voxture went on a run from, called the 30s, all the way to a buck 70 when they got the AOL approval. And at that point, when they were showing the results were still showing the 10-15 million dollars per quarter, and the margins were way lower. They were losing money, but everyone was throwing money at them. And just so that people don't construe this the wrong way, because some people will come out and say, "Oh, well, it's MCE members and and Marius's people." No, you had 8 Capital all over it. You had Cormark. You had like few institutions that were like giving $1.50, $2, $3 targets. So the point is that when there is irrationality, the price justifies the upside, and no one will look at the company. Now, what happened afterwards? What happened afterwards was, interest rates, inflation, all the worry points that everyone keeps talking about, and then we started seeing all the arguments on earth of how Voxture is a very terrible company. It's poorly run as a company because of the third party related receivable, because of this, because of that, and it's all bupkis. None of these things came out during the run to $1.70. And what that tells me is, again, we're going to that irrationality to the bottom. The business as Voxture is, especially post Blue Water, is 10 times as better as it was when it was at $1.50, $1.60. I can guarantee you that the upside on the business is significantly way better here. Not at the valuation here, but I'm saying as a company, fundamentally the upside is massive from here. because now is the time that we're going to start seeing Blue Water's revenue, high margin business kick in. We're going to start seeing that the AOL being adopted. And I mentioned it before. I said, to me, AOL and Blue Water are the Trojan, horses that are kind of behind Boxer. I think the rest of it is not, is going to grow. But these are kind of the AOL and Blue Water is always going to be the key driver to significant high revenue. Blue Water is going to be able to push some of the other, um, solutions that Voxer has. So they're going to work. Not only are they going to grow themselves, but they're going to push the other portions of it. And one last thing about Irrationality. You have interviewed Al a few times. You and I should agree to an extent that Al is not an idiot. Okay. This guy sold his company to Voxer over a 4-year period of time. So he's going to get paid in stock over 4 years at 55 cents Canadian. So you have a major guy that owns a significant asset that is worth probably almost the market cap of Voxer today. He was willing to sell his company in lieu of stock that is vested over 4 years at 55 cents. So almost double where we're at. And here we are at 31 cents, and people were saying at 22 cents, we're going to zero. And literally 2 months before that, Blue Water transaction happened. So the irrationality is insane. If you want, we can talk about the Dura, unless you have any comments here.
Well, I kind of have a similar situation that happened with Oracle, which I know you don't own this, but let me pull up a chart of Oracle. Can you see it? It shows Voxter.
I can see Voxer at 109, which I can work with that.
Yeah, here now you can see Oracle, right?
Yeah.
Yeah. So same thing happened with Oracle, where Oracle from the bottom of COVID had this huge run from 20 cents to over $3, like almost 1,500 return. And at that point, where the stock was at over $3, the company didn't even start confirming historical drilling. So it goes back to the same thing, that people had no problem buying it at that level. And then, of course, during that time, they were blaming me that it's my fault. They were no problem buying it when they had no proof that the historicals were there. They were just happy to gamble what the future was going to bring. And then after they started drilling and doing exactly what they said they were going to do, the stock goes from 330 to 60 cents. So like 80% down. 80% down. So I guess it goes back to the same thing, that people are more interested in speculation and fantasy and thinking what something can do than actual reality. When they're not interested in reality. They're not interested in revenues or profits. They're interested in possibility of those profits or revenues.
Absolutely. And now we'll turn to Aduro, which I think is one day I'm gonna stop saying that this is mispriced, but until that day, I'm gonna continue doing it. So Aduro, you introduced it to YouTube at 72 cents. So it's up, probably 25, 30%. And he introduced it, I think, in July. So, it's great. It's up. Okay. It's not one that is down. But, what is the market cap of Aduro? Market cap of Aduro is less than 40 million US, right? It's nothing, you know. Now we've been saying several times the same story to people, and people don't want to listen, which is we keep saying, guys, take a look at Pure Cycle. Take a look at, Pure Cycle is just is using a mechanical approach. So one of the verticals is, for Aduro is upscaling uh, or recycling plastics. And people, are willing to go and buy Pure Cycle, which does a small improvement, a tiny improvement to the current regime, which is most of the current recycling approaches are thermal, very heavy energy. And these companies, the difference between that and mechanical is it's more selective, and because it's more selective, you can have a slightly better yield and slightly less energy. Now, you look at Pure Cycle, you still have to build a central unit. It's going to cost you $200-300 million. They're going to have their first commercial facility in 2023. It will not be at full capacity. They will have a yield of 60% or so. They need pre-processing facility that is massive, very expensive. And again, they don't own their IP. That's something that I keep saying. If you don't own your technology, then what am I valuing the company at? But anyway, Pure Cycle is $1 billion, $2 billion, US dollars. Okay. And then we talked about Mira. Mira is, also another example where still 2023, 2024 is the earliest that they're going to have a commercial unit up and running. And again, it's going to be 20,000 to 50,000 tons of processing. Lysella, same thing. And this is one vertical of Aduro's. And these companies, all of them, they share the same paradigm where they're $1 billion plus. And none of them, okay, make any meaningful revenue or any meaningful free cash flow. So if anyone comes and says, no, but, the market does not like anything that right now is, not making revenue or free cash flow, well, then they shouldn't like the others. That's how I look at it. But the reality is, because of the deadline, because 2025 is around the corner, because these companies, everyone needs to find a solution to the elephant in the room, which is we have accumulated 8 billion tons of plastic waste. We produce 350 million plus tons per year. We need a solution, and the world has agreed that by 2025 that solution has to be available and has to be adopted to the tune of at least 25% of plastic that is produced. You did a great video the other time talking that all of the current, and it was covering CNBC, all of the current commercial units that will come online will only produce 300,000 tons. They will only be able to process 300,000 tons out of 350 million per year. That's it. So people, need to kind of get a wake-up call around Aduro. And then, I don't know what it's going to take for people to realize. But I know one thing: value is there. So it might take another 6 months. It might take another Shell game changer was announced. The stock did budge, but not significantly. But let's take that as a win. Um, but maybe it's going to take a couple of more names that people are going to wake up, and it's going to get more eyeballs. But that's again the irrationality that's around the market, because now the other reason I think Aduro is kind of in this penalty box is it's in Canada, and Canada has produced there was a company called, or it still exists, called Cielo, and Cielo went from uh, you know 50 million market cap to a billion market cap, and they never materialized to anything. And today, what is hilarious about the irrationality is that Cielo has no iron sight on commercialability. They have no partner. Their process is paralysis, so it's the same thing. No one knows whether it works or not. The founders have cashed out at the top. It's a complete disaster. And yet, it today, after coming back from $1 billion, it trades at a valuation of higher than Aduro for no good reason. You're buying a shell. You're literally there's no. I don't know what's the value of CL today. So again, irrationality. People are trying to defend their last few cents in this investment. So that's the best way that I can say. Now, going outside of that, let's talk about a couple more examples of irrationality, and talk about what is hot right now. And there's a company, lithium, a few months ago became so hot because of all of the EV cars that we have to build, right? And you look at a name that became so popular in Canada called PMET, Patriot Battery Metals. PMET hit a valuation of $1 billion. Okay, you can see where it started 2 years ago. If you go on a 2 years or 5 years, you'll see where did it start. It started from pennies, and it hit a high of around $10 Canadian, 10.50, close to $1 billion plus US Canadian. And the reason why they hit that is because of the overriding driver is all these EV cars need lithium. These guys hit few discoveries in Canada, so it's a safe jurisdiction. But from drilling to taking this to a mine, we both know that it's going to be years ahead. It's going to be it's going to require a lot of capex, and that's when people are going to realize that this is going to come off. And the same thing goes now, because Patriot had a huge run. There are so many Canadian listed lithium stocks that are literally, just because of the virtue that they're adjunct to Patriot, they're trading at anywhere between 5 and 100 million market cap. They have nothing more than maybe a showing, maybe a drilling program that's starting, maybe something to that tune. And if Patriot drops, all these names will drop with it. So again, it speaks to the same point that we were saying, that people want the speculation. They don't want the reality. They'd much rather live in the la la land of this could become $5-6 billion instead of looking for value or seeking alpha. And I'll end with one last comment. So this will continue. This irrationality will continue. The next Shiny thing might be gold, might be uranium, it might be something else, and people will do the exact same behavior. So, in conclusion, I would say that no one really likes to do the work and invest in companies, or the majority, I'm going to say. The bulk of people like to speculate, whether it's small caps or large caps, because a lot of people come in on your show or other shows and say, no, 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 but once it goes on NASDAQ, it's going to be different. No, 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 it doesn't matter. When there is irrationality and exuberance, it, NASDAQ or on TSXV, you're going to have the same behavior.
Yeah, TSXV doesn't have a monopoly on stupidity.
Exactly, exactly. So I know that was kind of my quick, uh, chat that I wanted to kind of go over with you. I don't know if you have any comments from your end.
No, I think it was great. I think you gave great value to the listeners. Let's stop here because the video is getting a bit long here. So thanks for doing this.
Thank you so much. Thanks for having me. Have a good one.